If you have any questions during the webinar, please put them in the chat window, and if time allows, we will answer them, either while we're on air or through an email to you after it's over. If you have any problems with the material of the webinar as far as audio or others, contact our office at 800-741-4084. Again, 800-741-4084, or type in the chat window, and we'll try to fix the problems as soon as possible. We've been doing this now for 3 hours, 1 hour each in the previous months, and we talked about the first section about why a motor carrier needed a general liability policy and the potential exposures. And then in session 2 and 3, we addressed the actual coverage itself based on the exposure a motor carrier would have. At the end of this section, we'll recap those things. We have not addressed the critical point of the motor carrier meeting their customers' requirements. That's what we're going to look at this session. When a motor carrier asks a provider of insurance to provide them a service, the first and the foremost thing they need to look at is to, quote, be legal, unquote. That requires an auto liability policy to be issued them, and the federal filing M91X or state filing Form E, and the endorsement MCS 90 attached to that policy. This completes the process of them being an authorized carrier, or saves them from being fined if they're inspected by the DOT officer, or allows them to operate in the state. Those filings and those permissions to be legal are based on the auto liability policy. But with that said and started up, really the use of the policies we write them is to satisfy their customers' requirements. Most customers that your motor carrier will deal with, either a shipper, receiver, or in some cases a broker, they cannot do business with those entities without providing some proof of financial responsibility, some proof of insurance to allow them to do business with those customers of your insurance. So when we talk about customers, we're talking about shippers, brokers, receivers, anyone the insured gets their business from. Typically, there will be a contract involved between the two parties. So the retailer gets a call from the insured. I have an opportunity to establish a relationship with a shipper, but I have to sign a contract that contains a harmless and identification agreement, and it requires me to agree to waive subrogation against them. The contract also requires that I add the shipper to my AL and GL policy as an additional insured, and to send them a certificate of insurance that will obligate the carrier to send 30 days notice of cancellation. In addition, the coverage provided by my policy must be primary and not require contribution. Typical wording, obviously the wording here we spell out that maybe the retail agent would not be quite as sophisticated saying that, but this spells out the points that are trying to be made. Hold harmless agreement, waiver of subrogation, primary, non-contributory, and notice of cancellation. A shortened version of that is the shipper contract has me holding them harmless for anything that happens while I or anyone I use am on the premises, including injuries to myself, my employees, or others I use to complete the contract. This is where if we use an employee or even an independent contractor to be on the insured's premises, that the motor carrier, your insured, agrees to hold them harmless for any injury done to those people, even if it's the negligence of the shipper, the customer. They also request coverage, obviously, and a limit shown here, $1 million. If they're sophisticated enough, they would show the GL of the $1,000,000/2 million. And they would ask for proof of work comp coverage, and in most cases also ask proof of cargo coverage. In other words, it contains not only the requirement to be primary, additional insured, non-contributory, but also with a waiver, but also certain types of coverages, which would include AL, GL, work comp, and cargo, along with the indemnification provision, which requires your insured to hold the motor carrier harmless for things that happen while your insured has workers at the locations completing this contract. So those are the elements we walk through. But the bottom line to this is, if I don't sign the agreement and send proof of insurance, now of course that'll be now, I can't get the job and I really need to work. Or I'm sure some of you have had the discussion or have had the call is, hey, my shipper is holding up my paycheck. I've already worked for them, but they won't pay me until I send them a certificate of insurance, meeting their requirements. Of course, this would be something that we would hope would be answered before they start the work, not after. But as we know, sometimes things need to move faster than what the paperwork does. Question I have on the bottom of this slide is this typical? And I'm sure everyone who's been in this business has had a request or some request to this. For what type risk? That would be the question I'll have here. The larger the insured, the more direct relationship they have with more sophisticated shippers, the more this is required. Today, if the shipper has a facility, typically your insureds cannot access those facilities. The motor carrier cannot go on those facilities to load and unload without having a contract between the parties that spells out not only the insurance requirements but other terms involved that we haven't addressed here. Venue, who payment, what's going to be paid, in some cases even about how on a drop and hook operation the trailers have to be left. It could even include some requirements of the cargo to be counted and who's responsible for the seal and things like that. We're going to focus on the two elements that we talk about here, and that is first the requirements of the insurance, and second is the indemnification agreement. I would suggest one thing to you as we go through this is that when your insured calls up and wants this, I would strongly recommend that you get, if you're a retail agent, get a copy of at least the 3 provisions in the contract that are relevant to us. That is the first part of the contract, which spells out who the customer is, their address, their name, and things like that. Second, obviously, the insurance requirement. And third, the indemnification agreement. Those 3 things will only allow us to do our job better. And so these are type of risks who are getting loads directly from shippers or through brokers who represent shippers requiring this, and that to access the shipper's premises or, again, the receiver's premises, the consignee's premises, these contracts have to be signed and have to be in place in most cases before the insured can get onto the premises. In a lot of cases, depending on how large the shipper is and how sophisticated the loading facility is, it might be such that we can't pay you until we have received this, because in those cases the load would already have been hauled. Again, depending on if it's a large manufacturer versus a produce packing house where would be less controlled and less requirements placed on the motor carrier to do business with those customers. But in all cases, this is becoming more and more required for your insureds to meet their customers' requirements of insurance. Just to give you a short reminder, when we did the earlier presentation for the first part of this year that was filed for CE in the business auto coverage form, that the standard ISO auto liability form, the business auto coverage form, or the motor carriers coverage form, or in reality also the past truckers form. There's a couple carriers still using that, although I think most people have cycled off of that. These requirements that I just outlined, again, additional insured, contractual coverage, primary, non-contributory, and a waiver. Those items are already built in to the standard ISO liability forms without an endorsement. In other words, a certificate can be sent reflecting those things on auto liability, without any endorsements added to the policy. For you who want to dig in this further, not only for auto liability, but also to have a guideline or step to take care of the rest of the things that we're going to talk about at GL, we have posted on the Transportation Risk Specialist website a white paper addressed meeting customers' requirements that spells out not only how this is done, but where you find it in the various policies to verify it's done, suggestion of how to communicate that to the customer, and where needed, an endorsement and endorsements numbers that would be added. Let's talk about the first part of this, and that is, or one, as we start here, the notice of cancellation. This is a lot of misunderstanding here, because when we look at the auto policy, when we look at the general liability policy, when we look at any ISO policy, they have a general condition page that spells out who has to receive notice of cancellation. And in those cases, it would be the first named insured. The first named insured is the legal entity that's named first on the name insured line, which is item 1 of the auto or general liability deck page. The insurance carrier has no other person to send notice to, even additional insurers, except for the endorsement 2001, which is the auto liability endorsement, which is the additional insured lessor and loss payee. That is the only endorsement that requires notice involving two customers or to another party who owns the vehicle. There is endorsement for additional insured lessee when your insureds might let an owner-operator operate under their authority, and the owner-operator have their own coverage. Again, that's auto liability, and that would be added. That would have the cancellation provision. But in the absence of those two situations, the leasing company's protection for as a lessor for the vehicles you're insured using, or an owner-operator setup where the owner-operator has their own primary coverage and is still operating under the motor carrier's authority, those are the only ISO additional insured endorsements that require cancellation to be sent other than the first name insured, which is the first legal entity on the item 1 of deck sheet, no one else. The certificate of insurance has only cancellation provision, also has a cancellation provision addressing the sent of cancellation. The new wording in this, and this was a change that happened a couple years ago, the cancellation said, should any of the above described policies be canceled before expiration date thereof, notice will be delivered in accordance with the policy provision. Again, that's the first name insured. The certificate holder does not get notice based on this accord wording. Some of you who have been in this business for a long time remember that the old accord wording had, we will endeavor to send you notice of cancellation, and then put a date, 10 days, 20 days, 30 days of how often we'll endeavor. There was never a guarantee based on any standard certificates available to us in the insurance industry. Now, there are certificates that are specialty carriers. There are certificates that might happen that we'll talk about here in a minute on those things, but those are the standard companies. In the old days, where it used the word endeavor, I felt that at least an effort should be made to effect a cancellation, and that would be sent to the certificate holder. But now there is nothing here to be sent other than what's involved in the policy. So the certificate holder would get notice, but it would be only based on the notice here. It's based on the time requirements and the policy, not in the certificate itself. So as you know here, the customer would not necessarily get 30 days, because if the policy is canceled for non-payment, in most situations the non-payment allows the insurance industry to cancel the policy in 10 days. So if that is provision here, even though the certificate holder would get notice, and providing the terms of the policy, meaning that the first name insured would get notice, plus the certificate holder would get notice, but it would not spell any particular days. It would be spelled out to be the time frame that the policy requires, and as you know, in most cases that would be a 10-day certificate or requirement for non-payment. So bottom line here is, what's the danger for insurance carrier to agree to 30 days? it's purely premium. So if the situation is such that the insured customer will not let them work for the customer unless the insurance carrier agrees to the 30 days notice sent to the certificate holder. My suggestion here is don't walk away from that, again, depending on how good your customer is, your motor carrier is, how much you want to write the insurance. But the 30-day provision should be addressed or could be addressed in the down payment. No difference than what we talk about the cancellation provisions in the MCS 90 as attached to the policy, which requires, as you know, the 36-day or 35-day plus, depends on what time the effective day of the policy is. I call it 36 days notice, which is done with dollars. So for auto liability, if you have a motor carrier with MCS 90, you cannot cancel the endorsement, which is attached to the policy, therefore in most cases the policy, without giving at least 30 days notice. And as you know, we always suggest that you get 25% of the premium upfront, 3 months of the premium upfront, so you can facilitate that. You can take the same approach here for the cancellation of the policy, where you, the insurance carrier or agent, you get the insurance carrier to discuss notice and guarantee the customer at least 30 days. That would have to be addressed with sufficient down payment and sufficient money up front and a payment arrangement so that you're comfortable with not having to cancel it shortly of the 30 days because of non-payment. Second, let's talk about the waiver subrogation. This is also a misunderstood situation. This is when an accident happens and somebody else causes the accident. This could be dangerous damage to your insured. It could be damage to another party, and whereas the other party is responsible for that damage. What the policies say is that if another party is responsible for damages, then when we pay your claim, we have the rights, meaning the insurance carrier, to go back against or ask for subrogation against anyone else who caused the accident that required your policy to pay. So, however, the standard ISO policy has that wording in it, but what it says is we only prohibit waiver subrogation after the damage is done, not before the damage. So if the contract between the motor carrier and their customer, the shipper, contains a waiver subrogation provision which says you, the motor carrier, agree to waive subrogation against us for any injuries happening while you're completing this contract. Again, I'm paraphrasing. The words will be similar to that part of it. And your insured signs it, as well the customer signs it. Then the insurance carrier would have to honor that agreement that's contained in the contract, because it's not prohibited by the ISO auto liability and general liability policies. Different on work comp. We're only talking here about auto liability and general liability. There is some ISO endorsements, though, that can be added to the policy that reflect waiver subobligations. However, in my opinion, they do not spell out anything more than what's already in the policy. Therefore, the charge for that should be, I think, either nothing or what it costs to add the endorsement to the policy going in. You have not assumed any more exposure if you know the insured has had signed a contract with that wording. Obviously, they have not signed the contract, and you are taking some possible recovery away from you, the policy, particularly property policies, particularly physical damage policies. That's slightly different in work comp. Work comp does not have that, and in work comp you would have to add a waiver of subrogation to fulfill this, and in most cases the work comp carrier is going to charge you money, $150 to $500, depending on the carrier and depending on how many of those you have signed. But so the cancellation provision can be handled through the 30 days through premium. The waiver is already there for auto and general liability. If there's a contract signed containing the waiver of subrogation, there are ISO endorsements that reconfirm what the policy already allows the insurer to do previous to a claim, previous to damages. Should be different for the work comp situation, where you would have to have the work comp carrier to waive subrogations, and therefore that would charge, since the work comp carrier is giving up potential recovery, that would cost you some dollars. Now, let's talk about the additional insured versus hold harmless agreement. How is it required? Hold harmless agreements in the contracts plus additional insured. It amazes me that sometimes people call up and say, this customer wants to be added as additional insured. In most of these cases, and in every case that I've looked at, this requirement is driven by some contract. So again, my suggestion to you as a retail agent, and in some cases the insurance carrier, when you have this request, what you want a copy of is the contract. And again, reiterate the 3 provisions in the contract that are relevant that you want to look at so that you can, quote, do it right, unquote. Who are the parties? That usually is in the first paragraph, which says we're the shipper and therefore we require this endorsement to be added to the policy or these provisions for the motor carrier. And so that tells you a lot of times there, most times there, it will give you the address it has to be sent to and the shipper's address, so you're able to send the certificate promptly. And then again, it will have the hold harmless agreements and the insurance requirements. The problem we have with these is that often these agreements are not discussed or even disclosed prior to underwriting the risk. I had a situation where an agent called me a number of years ago that said, Tommy, I just changed insurance carriers, and their customer, who is their #1 source of income, is not letting them own their premises because the current insurance carrier has not or will not send a certificate of insurance reflecting the insurance requirements of that customer before my insured can do business with that customer. Folks, this should never happen to you if you're a retail agent. I strongly suggest that you, as a part of the underwriting consideration, that you would find out these facts. The unclosed GL policy includes coverage for most hold harmless agreements already. And again, the auto policy has the built-in additional insured, as well as the hold harmless agreement insured contract, the AL policy. The general liability policy would have to have an endorsement added. But those are things that you want to look at as a part of taking care of your insureds as you look at the policy at the renewal time and or the underwriting time. So let's look at these 2 requirements. Adding an entity as additional insured and the hold harmless agreement. They're 2 separate things. And I will give you a preview here, and that is anybody my insured agreed to hold harmless, I have little problems adding them as additional insured, because the real problem is not the additional insured position in the policy. The real problem is the hold harmless agreement. But with that said, that's kind of a teaser or preview to look at things beyond what you might think. Additional insured endorsement. What to look at when requesting. Do you have dollars to add? Some carriers do add dollars to those and charge anywhere from $50 to $100, depending on what your position is. I've had a couple of carriers even trying to charge me $500, $600 for additional insured. Clearly, sometimes you can buy the blanket additional insured provisions on the GL policy up front, which says, in essence, that any contract the insured signs that requires an additional insured endorsement to be the person involved in the contract, the customer, to be additional insured in a policy, it's automatically covered already in the policy. So you have either the automatic provision and or each individual provision depending on what's there. However, this might not provide coverage that the customer thinks, and this happens all too often because the additional insured status ISO form provides protection to the additional insured, but only with respect to liability caused in whole or part by the insured, not the customer. So what this is talked about as additional insured is what we have talked about in the business auto coverage, but you hear me talk about often when we do the face-to-face presentation. The only time additional insured has coverage under the insured's policy is when they're held vicariously liable for the actions of the insured or an employee of insured. So it's only when you are held liable for the acts of the insured, not their own negligence. They have no status in the policy other than that. So in realistic terms, when this happens, the insurance carrier is defending the insured's actions. The negligent actions that the insured causes damage to be paid, and the insurer would have to pay those damages caused by the negligent actions of the insured. All that you're adding to this is you would have to have another settlement agreement to honor this provision here if you're settling it within policy limits to also get a release from the shipper. If you do not settle in policy limits and it goes to court, therefore the settlement would not be involved in that, and the additional insured status would have some exposure over and above the policy of the motor carrier, the insured. The bottom line here, this does not pick up the insurer's negligence. It only picks up their vicarious liability for using the motor carrier you're insured, and any claim that would be paid in the policy would be a derivative of the motor carrier's negligence, not the customer's negligence, and the damage done by the negligent actions of the motor carrier, not the negligent actions of the customer. So that's the limited part of it. There's also no cancellation of any additional insured except the two I mentioned, additional insured lessor and additional insured lessee that we talked about earlier in the auto liability form, not in the general liability form. So the additional insured does not get notice of cancellation because of the requirement for because of the status as additional insured. These are the endorsements CG 2010, an edition dated on April 14. This addition insured owner's lessee or contractor scheduled person here. Who's insured is amended to include as additional insured the person or organization shown in schedule, but only with respect, here's the key wording, only respect to liability for bodily injury, property damage, or personal injury, habitat liability caused in whole or part by the insured. That's the insurance, acts or omission, or the acts or omission of those acting on your behalf. So it's just when they're held liable for the actions of our insureds or anyone working on the behalf of our insureds. And the performance of the ongoing operations for the disinsured locations here, this would limit it to just the ongoing operations, not the products of completed operations here. The insurance afforded to such a disinsured only applies to the extent permitted by law. That's going to be relevant here in a minute when we talk about anti-identification agreements. If coverage provided to this insured is required by contract agreement, the insurance afforded to such a disinsured will not be broader than you are required by the contract or agreement to provide. So again, even their additional insurance status will be limited by policy or the contract involved in it. That's one. The other endorsement would be the CG 2037, again April 13th, additional insured owner, lessor, contract, automatic status when required in contract agreement. This is the one that I referred to earlier, that you do not put individual names here. It would be the provision here in this endorsement would be the who is insured amended to include as additional insured any person or organization for whom you are performing operations when you and such person or organization have agreed in writing in a contract agreement that such person or organization to be added as additional insured on your policy. So you don't need to add individual endorsements. However, it still has that same wording that we had before. It's only for the acts or omissions or the acts or omissions of those acting on the insured's behalf in performance of your ongoing operation, and again, only as law provides and the contract spells out. So it does not provide any additional coverages. The advantage of this endorsement over the previous one is you do not have to add individual endorsements in the policy. This is a blanket one, but is again driven by the contract your insured signs, where the contract requires your insured to agree to add the customer as additional insured. This is another endorsement, CG 2026, April 2013. Again, addition, this is designated person organization. Who's insured to amend to include additional insured, their personal or organization shown in the schedule, but only respect again to the liability property damage caused in whole or part or the omissions or acts of those acting on your behalf in the performance of your ongoing operation or connected with your premise owned by or rented to you. Again, just a status, but the point here is it doesn't pick up any of their liability, meaning additional insured, just when they're being held vicariously liable on behalf of yours. So, summarize, the additional insured endorsements provided by ISO, and it's also the same wording in the provision C of the business auto policy, who's insured, in provision E in the motor carriers who's insured provision. It's anyone liable for the conduct of someone who's already insured. So endorsement must be added to the general policy to add someone disinsured, where the general auto liability policy already contains this wording in the provision, again, C in the business auto who's insured, or the provision E in the motor carrier form, which holds anyone liable for the actions of the insured would also be an insured. So this is why it's not required an endorsement in the business auto policy and the motor carriers form, which does require an endorsement in the GL policy. The GL policy, as well as an auto policy, do exclude agreements that are do not exclude agreements that are insured contract. So we talked about the additional insured provision, but let's talk about the whole harmless. Exclusion G is exclusion for contractual in the GL, and it says this exclusion does not apply to liability assumed by an insured under an insured contract. That's a defined term with quotation marks. So let's look at the defined term of insured contract. I'm looking at only one provision in it, and that is F. By the way, this wording is very similar wording and provides the same protection of insured insured contract and auto liability policy. It says that an insured contract, which means the liability assumed under this type of contract is not excluded. It is covered in the policy. That part of any contract or agreement pertaining to your business, including indemnification of the municipality in connection with work performed in this one, under which you assume the tort liability of another party to pay for bodily injury property damage to a third party or an organization. Tort liability means liability that would be imposed by law in the absence of any contract agreement. That is the negligent. So here's the big contrast. This is broad form contractual. If the contract signed requires motor carrier to be held liable for the customer's negligence, it is an insured contract. Again, the additional insured endorsement only makes the customer an insured when they're held liable for the actions of the insured. The whole harmless agreements that your insured could sign, if they require them to hold the customer harmless even for the customer's negligence, would be an insured contract. So there's more exposure because the additional insured provisions do not provide coverage for the customer's negligence, just their vicarious liability for using the insured, and any liability would be a derivative of the insured's actions, not the customer's action. The harmless agreement is one where the insured can assume the liability of the customer, and that would be an insured contract. That's the big difference between the two. So, exclusion for bodily property, and again, both the auto liability and general liability exposure, covered if included in the definition of insured contract. However, it says if state law would not allow. There are some states, this is unusual, this is relevant here. For you who have been in insurance for a long time, know or have discussed this in earlier discussions for your licenses or other CE, where in the construction industry, where a general contractor could not require a subcontractor to hold them harmless for the general contractor's actions. That was against public policy. That law is called anti-indemnification, meaning you cannot have an indemnification agreement. It's against public policy. This agreement is something relevant in the trucking industry. It's a big push that's been done by the American Truck Association and the state associations, proposing legislation to their representatives at the state level for the states to pass an anti-indemnification provision, which basically says that a customer of insured cannot require the motor carrier to hold the customer harmless for the customer's negligence. So when you have contracts signed and the policy says it will be enforced in the state laws defined in the contract and or the venue defined in that contract, you would have to determine either one or both of those things. It says it's signed in any state other than Arkansas, Delaware, Mississippi, New Hampshire, New Jersey, New York, Ohio, Rhode Island, and Vermont. And I'm listing these states. Every other state has an anti-identification agreement in it except these. As I know that more and more of these are being passed as we speak, please check in the various states here, because some of those states might have also passed the law since I did this presentation, or later if you listen to it beyond the time frame we have done it live. Those states say that the contract signed between the customer, the motor carrier's customer, the shipper or the receiver, and the motor carrier, the insured, if it requires the motor carrier to hold the shipper harmless for the shipper's negligence, it's not enforceable. It's against public policy. So it would not allow that to go forward. Major difference in here. So much so that the two things that happened a number of years ago, we did a presentation where we had a representative of the trucking industry, and I asked them what was some of the concerns that the trucking industry had involved insurance, and his comment was the contracts the insured signs to have to get on premises. That was 5 years ago. It's almost reversed now. What the American Trucking Association is saying is that if you're in one of these states that have an anti-identification agreement and the contract is signed under those state laws, don't worry about you holding the customer harmless because it's not enforceable. That's almost 180 degrees away from concern to a solution. And these things that first off we should support, and second be aware of as we do this. So the provision is you hold them harmless under F. We honor that. The insured holds the customer harmless even for the customer's negligence. That's an insured contract. The policy would have to respond to it, but they might not have to pay anything because of the anti-identification agreement. However, there are two endorsements that you need to be aware of. And if you're buying this general liability policy on behalf of the motor carrier or insurance carrier, if you're providing coverage to a motor carrier and you're writing it non-admitted or you're writing with the endorsement on it, is something that I think you should point out to the retail agent. The CG 2139 removes F, which takes the broad form wording away, which would not then be involved in those few states that would have that wording in it, or CG 2426, which has a demo of insured contract, which again takes that wording away because it adds in the bottom of this, however such contract parts of the contract or agreement shall only be considered insured contract to the extent you assume the tort liability is permitted by law, but that's a concern here. They provided that above that is that the broad print is caused in whole or part by you or your action. So it's limited to the to not picking up the liability of the customer, just again restating the vicarious liability wording. So the bottom line is that the standard ISO general liability policy under the contractual only excludes contractual when it's not an insured contract. And the insured contract, the standard ISO wording, picks up the hold harmless agreement where the motor carrier holds the customer harmless even from the customer's negligence. That would not be enforceable in anti-identification states, and if the insurance carriers could add one of these limiting endorsements, CG 2139, which takes that wording away, or CG 2426, which still has the contractual wording in it but takes the wording away where the contract that holds the customer harmless would be an insured contract. So those are the three concerns here. Let's talk about how this might happen. The insured has a unit on their customer's facility. One of the customer's employee runs into the insured's unit with a forklift. The insured seeks payment from the customer. Hey, your employee damaged my truck, pay for it. the customer says, whoa, 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 I'm not going to pay for it because you agreed to hold me harmless on those things. Or the insured could turn it into their insurance carrier. Their insurance carrier could pay, and the insurance carrier then would seek subrogation back against the customer. So here's the problem. If it's a harmless agreement which says that you will hold you harmless and seek a payment, they wouldn't do it. But if a waiver or subrogation is signed in the contract for the physical damage coverage, then the insurance carrier could not seek reimbursement from the customer when the customer damaged the insured's vehicle while on the customer's facilities. So that's how it works. First off, there would be a stop. The motor carrier would be a stop to seeking it, and second is the motor carrier's insurance carrier would be stopped from seeking reimbursement, even though the damage to the truck or trailer was caused by the negligence of the motor carrier, of the motor carrier's customer. And the contract contained the waiver subrogations and the hold harmless agreements, or the identification agreements. Let's talk about an employee or owner-operator on premises of customers and gets injured by the customer negligence. This is more relevant. This is more dollars. The employee sues the customer for his or her injuries, as well as making a claim under work comp. The waiver subrogation. The work comp carrier, when they pay the claim, if the injury was caused by the negligence of the customer, would have to pay the work comp claim and could not seek reimbursement against the customer because of the waiver. Since this is far more exposure than the physical damage in others, this is why work comp and the work comp contract does not build in the permission of the insurer to waive subrogation before the crash or for the accident, before the incidents. Then this is why you must ask the work comp carrier to add a waiver subrogation in favor of the customer, so that they cannot come back and seek contribution into the work comp case from the customer. That's the provision here. Let's talk about the owner-operator. A lot of our insurers are using owner-operator, and the owner-operator gets injured on the facilities. They would not be covered necessarily by work comp. They might be covered by an OCAC policy. They collect the OCAC. Does the waiver subrogation signed by the motor carrier extend to OCAC? Again, you would have to look at the OCAC wording, and if it allowed the insured to waive subrogation against, will only prohibit the insured from waiving subrogation against anyone after the accident, then yes, it goes back to the same wording in auto and GL. However, it might not do that, and the waiver that the insured signs in the contract would not then include the owner-operator's coverage in OCAC to seek subrogation against the shipper. So that's a concern you have as a shipper for allowing owner-operators on facilities where you have OCAC. You would want to make sure that the owner-operator's policies also contains a waiver, and the agreement by the motor carrier does not extend to the owner-operator. So that would be a disconnect in those things. So the bottom line is the employee gets injured, whether it is an owner-operator or a true employee on the facilities of the customer. The customer negligence caused the injury. The employee sues the customer, which we'll talk about in a minute, and collects work comp. The work comp carrier then would seek subrogation against the customer for what they have to pay out on comp. If a waiver was signed on behalf of the customer on the work comp and an endorsement was added to the work comp carrier policy, that would then preclude the work comp carrier from seeking reimbursement. The owner-operator could be a different situation, because the owner-operator that got injured, they will collect under the OCAC policy. That OCAC policy did not contain a waiver, and in fact the motor carrier would have very little, if any, ability to have the owner-operator's OCAC policy, because it's a standalone health accident policy bought by the owner-operator, not involved by the motor carrier, to have the owner-operator OCAC policy to contain a waiver in favor of the customer. So that would be a concern that you would have to have. But let's talk about the injuries to this employee. The general liability policy excludes injuries to an employee. So when the employee sues the motor carrier, then there's no coverage. But now let's talk about when the motor carrier's employee is suing the customer of the motor carrier for the employee's injuries on the motor carrier on the customer's facility. So what we have is you have your owner-operator, you have your employee, the driver, on the facilities of the customer. That employee gets hurt. It's the customer negligence. The employee could and would seek work comp if you have work comp. The work comp carrier would pay. The work comp carrier could seek subrogation if a waiver was not signed. But even though the employee is collecting work comp under the motor carrier's policy, they can still sue the customer. And when they sue the customer for their negligence, the customer is going to say, motor carrier, you agreed to hold me harmless. Honor your harmless agreement. Go back to that wording we talked about in the introduction, where you hold me harmless for any injury to any person that you bring to the facility to accomplish the contract. That's paraphrasing that earlier wording that we have in here, and that would include the customer's negligence here. So we sometimes don't read the provision here, because if you look in this provision and you look down here, employee liability, there is a provision, an exception to when an employee liability, the exclusion does not apply to bodily injury to an employee, and that would be this exclusion does not apply to liability assumed by the insured under an insured contract. So if the insured signed a contract and it's not in an anti-indemnification state, and the insured signs a contract that says we'll hold you harmless for injuries to our employees, even when it's your negligence that caused injury to employees, and the employee gets injured by the negligence of the customer, the employee sues the customer, and they can also, again, collect work comp at the same time, but sues the customer. The customer is going to the motor carrier and say, motor carrier, honor that agreement. And in absence, again, of an anti-indemnification state, that agreement would be an insured contract. So therefore, the general liability carrier of the customer would have to address the negligence of the customer, general liability coverage of the motor carrier would have to address the negligence of the customer and pay any damages done by that negligence under the general liability policy. So what you have is you have your insured work comp policy paying the injured worker, and you have your insured general liability policy, honor no harmless agreement, and paying the injured worker even from the negligence of the customer. That's why the anti-indemnification states are so important. So when customer gets sued by the employee, the customer sends the suit to the motor carrier and says, honor the whole harmless agreement. It would be an insured contract. So the insurance carrier, if no endorsements limiting coverage, would have to honor the contract. It would be the same also for the owner-operator. That is, again, if it's not in an anti-indemnification state. That's why that the state provision is so important, because this is where the big dollars are, and this is where the big exposure is. So the anti-indemnification state, the agreement between the insured and customer would or would not be enforced depending on the state law. Still an insured contract, so the customer, the insurance carrier has a duty to respond and to defend, but they would not have to pay anything because the law would not allow. However, the employee could still sue the customer, and this is a concern here. Then the customer insurance carrier would have rights to recover unless the motor carrier's work comp policy contained a waiver. So that would be a concern there. The owner-operator could sue. The waiver signed by the motor carrier would have no effect in those areas on the OCAC policy. So the employee then could sue in those cases and collect, and the whole harmless agreements would not apply here. So the other provisions you have here, and this is also a concern you have, the customer requires the work comp, the insurance requirements on the certificate to be shown that the motor carrier has work comp. Question I have often is, does the certificate of insurance reflect work comp coverage for all people the motor carrier uses? Meaning that the motor carrier has comp, but is that comp covering the owner-operator? And this has been a discussion here because what you're thinking about here, what benefit is it for the motor carrier to have work comp coverage for the customer? Because the work comp policy will not extend tort immunity to the customer. Again, if the customer was negligent, even though if the work comp carrier, the motor carrier, paid for the injuries to the worker could still sue the customer, and the customer would not be afforded tort immunity as the motor carrier would have been afforded tort immunity. So the customer would still be sued, and as we went through here, the employee could collect from the customer as well as the work comp, and in absence of a waiver of subrogation, the work comp carrier could actually sue the customer and recover some payment made under the comp, depending on how the suits are drawn in those areas. So the only benefit I see for the customer to have the motor carrier work comp is so that the audit of the customer, the shipper's work comp, would not pick up the exposure of the motor carriers picking up loads on their behalf. It is not extending tort immunity. It would just be as you do in all work comp policies, where any subcontractor, anybody providing services to you, particularly on your premises, if they do not have work comp, the work comp carriers would come back and try to claim that's an exposure under the customer's work comp policy and collect premium for them. By having certificate insurance from the motor carrier reflecting work comp coverage for the motor carrier, then the shipper, when their work comp carrier comes audits them, can provide that certificate insurance of the motor carrier's work comp, and therefore it would not generate exposure and premium under the shipper or the customer's work comp policy. But it does not extend toward immunity, and the worker can still sue the customer. And again, depending on the harmless agreement and anti-indemnification and waiver of subrogation, the customer would have to honor that suit. When we look at the various levels of indemnification, you have the limited. This is where protection from customers named in the suit because of the actions of the insured. That's the vicarious wording. That says we hold you harmless only when you're held liable for our action. Some contracts have those wording. A mixture of those, the mixers at one level more than that, says the insured pays protects when they are negligent. Customers pays when they are negligent. So this is kind of split each way, which you're not really extending any coverage there, but just trying to split the agree on the contributory negligent provision. The one that we have been talking about, that is the broad one, the one where you have more liability under contractual than you do have additional insured. The limited one, the additional insured provision, matches that contract. The broad one, it does not. The insured will pay for negligent acts of the customer while performing the contract. This is when the customer is negligent. The customer's negligent causes damages. Typically it will be to the employee or to the vehicle. This is where the negligence is most easily looked at and will manifest itself most. And the injured party, again, the customers injuring the worker that the motor carrier sends to perform the job on the customer's facility gets injured by the customer's negligence. It could be a forklift hitting them. It could be they fall in an ice spot. It could be that they are fall down the stairs because of a banister or a handrail not being properly done. Then the customer gets sued, and if the insured has agreed to hold the customer harmless even for the customer's negligent, then they would have to step up. Again, that would be an insured contract, an absence of one of the endorsements, exclusion endorsements that take coverage away, or the anti-indemnification states. So you need to read those and understand at what level is your insured assuming the liability of their customer. The harmless agreement, that's an agreement to assume the financial responsibility of another party. Or if we hold you harmless, we'll take over the defense and all that. Indemnification means that we'll pay. When you're liable, we'll pay. And that could include the defense cost, depending on the wording that we have in there. defend or reimburse for defense. If indemnification wants to be defended, they have to tell you that. Otherwise, defense costs are subject to reimbursement. So those are the two differences. So harmless agreement is where you step up and you hold the insured holds the party harmless. Therefore, the insurance company provides defense, provides legal fees and those kind of things. If all it says is an indemnification agreement, then all that your insured does has to pay any damages done, and it could or could not include defense costs depending on how it's worded. So you have the limited, the modified, and the broad coverage, and you have the various terms involving here. So when we compare additional insured versus whole harmless agreement, all additional insured endorsements only provide coverage to customers when the customer is held vicariously liable because of the acts of the insured. It provides no protection for damage done by the negligence of the customer. Whole harmless agreements in contracts can obligate the insured to hold the customer harmless for the customer's negligence. That's the big thing. There's more exposure in contractual than additional insured endorsements. It is common for a motor carrier to sign an agreement with a customer to retain business. Most often the agreement has a provision that must be met before they can do business with the customer, and a certificate of insurance sent reflecting that the requirements have been met. As producer or underwriter, you need to obtain information about these requirements as part of the underwriting and risk and be able to meet these requirements when issuing the policy. It's too late afterwards. It's too late when the insured cannot access the facilities because we haven't met this requirement. So agents need to ask the insured or potential insured, who are your customers and what are their requirements? That'll tell us who they're doing business with. That will give us some idea and communicate that to your underwriter so that you won't have a problem that we had earlier referred to is when the insured changes motor carriers, motor carrier changes insurance companies, the insurance company stumbles or doesn't realize it or doesn't agree to meet the requirements of the customer, therefore the motor carrier can't do business. You don't want that to happen. That's not only egg in your face, but potential errors in omission for not doing it. So when underwriting, what will it take to underwrite and meet the requirements? This is where the agent asks the underwriter, what will it need and at what cost? This should be addressed up front. Also realizing that more and more insureds are having to sign these contracts to access loads that are provided by shippers, brokers, or in some cases consignees. If an insured who's a motor carrier has someone who claims damages, they expect protection. They expect defense and payment. They expect these items to be honored. They do not care what form responds. They do not understand the difference between coverage forms or even with contracts identification. They say, here I am, here's my business, cover me. At least after the claim, they will have that attitude. And then what they'll say is, what do you mean I have no coverage? You want to look at those up front. The liability policy will not address all the liability exposures. If the motor carrier has all the liability, they might be in a suit between the auto and GL insurance carrier to determine which policy has to respond, and that would be for the loading and unloading, mainly in those areas we went through that, the business auto in earlier sessions. If they do not have GL, a lot of times the auto liability carrier could be involved in claims that would be involved in GL. So again, here why a motor carrier needs GL policy. They have customers, other people on their premises, and that's their home, or that's the that they work out of. Those people get hurt because of business purposes. The homeowner's policy doesn't address that. Loading and unloading is a major concern with your insureds loading and unloading with a forklift, a front end loader, a crane, a non-motorized pallet jack, any of those things. That's a GL exposure, not an auto liability exposure. If they deliver product in the wrong location and then the product's used, that is again no coverage under auto liability once it's delivered. It will be a GL liability exposure. Libel and slander. Auto policy does not address those items in libel and slander. So you're insured particularly for the language they might use. The shipper or someone in the shipper's location could take offense to that and have a problem. Again, garage operations. Taking work in on owner-operators' vehicles after the owner-operator at least no longer, selling parts to another motor carrier. Those things will be covered under GL because your insured is not operating the vehicles, they don't own the vehicles are not rented to them, and they're not loaned to them. So those things would be covered under the general liability policy after the owner-operator cancels lease. As long as the owner-operator is still leased to the insured, then it would be an auto claim if the maintenance is done wrong. Bodily injury resulting from use of self-defense to protect persons or property. Got a case of that we're dealing with right now, where they have a bodyguard, and that bodyguard tried to keep someone from stealing a truck, and now that the injuries were inflicted upon the people stealing the truck, the people who are injured are suing, and that's covered under the GL. If you're stopping someone from stealing cargo, that would be covered under GL2 because the cargo policy does not consider intentional acts, where the GL does consider intentional acts for defense of persons or property. This again, you have guard dogs or other animals in the vehicle, or the insurance using guns in vehicles to protect the property. That's the GL exposure. Host liquor, Christmas party, facetiously we said, safety meetings, that would be covered under GL if you have the DRAM Act or if they hurt somebody because they're drunk. We just went through contractual. Major concern, the contracts your insured signs to access facilities pertain not only to auto liability but general liability. Therefore, to provide a proper certificate, you would have to have both of those coverages, as well as, in most cases, work comp and cargo, to allow them to access the facility. If they rent a hotel room and they burn it down because they smoke, again, unfortunately, 54% of drivers smoke, and they could burn it down, that's a GL exposure. The insured gets a call about a previous employer, and they do not divulge the items that involve the operations of the employee while the previous employer had them employed. Again, any drug fails or refused, any accidents, and when they were there, they could be held liable for those things, and that again could be concerned. Again, the vicarious liability. This would be brokers in the garage where the work that's done and the accident is caused by an auto that's not owned by, operated by, loaned, or rented to the insured is a GL exposure. And for nothing else to prevent your E&O exposure. Everybody needs both the auto and GL. And the last thing we just went through here is they need it to meet the shipper's or the customer's requirements. So GL coverage, should you provide the GL coverage? Yes, I think so. Clearly you should try to offer it. Why? Because in most cases you'll be involved in a loss anyway. So might as well get the dollars and provide the coverage and save your E&O. You provide insurance, agents offer. If the smaller motor carrier does not purchase, at least you've covered your assets. How enforceable should you be? Depends on operation. Drop and hook, small operation, maybe I'll slide on that. But flatbeds, heavy haulers, anybody's loading, unloading by hand, then it's a must. Excuse me, by machinery, it's a must concern. Insurance provider, if not by you, by some other carrier, you need to understand they have it or don't have it. This is the last part of the 4-part GL, 4-hour CE file seminar. We hope you gained something out of this. For later education, this will be posted on our website for people in your office who need the material. It will not qualify for state CE credit. Thank you for your time. We look forward to you participating on our next series of CE webinars provided by the Motor Carriers Insurance Education Foundation as a part of the TRS education program. Thank you very much. Have a good day.